Thank you for watching this recording. Today we're going to talk about some design patterns that we've recently developed that we want to share with everyone around putting together a budgeted income statement, balance sheet, and cash flow statement or statements based off of just income statement information. So for the income statement, that's going to come from various revenue expense templates just for projections on a monthly basis. Now the balance sheet itself is going to be one template to pull appropriate past year balances and current activity. I'm going to save the balance sheet information to time.annual. So rather than individual month, there's an element in the time venture called annual. And then the cash flow, similar, is going to be one template where the logic will be really in the template. And it will pull the right periods, do the right calculations, and save to, again, time.annual to get the cash flow information. So some assumptions that we can make for this approach, this design pattern, is that there's no budgeted balance sheet balances or activity. The balance sheet activity is purely a function of income statement revenue and expense projections. Also, actuals for previous years include balance sheet information, so we need to know what last year's or 2 years ago actual balance sheet information was to apply really to get the true forecasted balance sheet information. We have forecasts, and forecasts for the current year are a blend of actualized periods and remaining budget periods. So if you see something like a 6+6 and it's a 12 a standard calendar year, that means January to June is our actuals aligned with July through December of remaining budget periods of the plan that was for this year. But really what we're working towards is building a budget for the next full year. So then the budget is the future 12-month period that has not started yet. So let's say currently we're in 2016. Maybe we have our actuals for 2015 that's a full year. 2016 we only have a couple of months of actuals, and we have our original budget for 2016. Our forecast would be maybe January, February, March of actuals plus April through December of our budget to give us a 3+9 forecast of this current year, 2016. But what we're trying to put together now is a full budget balance sheet, cash flow, and income statement for 2017, for this next year. And then that information will be at an annual grain. So let's take a look at a little bit more detail how we can put that together. So here we are in Studio, and this is the balance sheet template that we're looking at. And you'll see that we've got really our assets, shareholders. The two sides of the balance sheet are just kind of split out here, as you'd see in almost a balance sheet report, with some major sections for whatever the major sections would be in your balance sheet. Here, we're dividing it into a couple of main areas, and these are all the different accounts. Now these include both balance sheet and P&L accounts that would create balance sheet activity. So we're going to start with, imagine right now is 2016, we're going to start with our actuals back from 2014, and we're going to possibly make adjustments to that, and that's going to give us our audited 2014 numbers. So that gives us, for the end of 2014, those are our audited financial statement numbers that we can start with moving forward. And you think of it as we're going to start from the left and we're going to build to the right. So we're starting with a baseline of our 2014 actuals. If we need to make any adjustments, that's we can do that, and that should give us our audited 2014 numbers. Then for 2015, assuming that's the year we're in right now, then we want to look at our 6+6 would be the first 6 periods of actuals plus the remaining 6 of that budget for that year. So for 2015, we've got what those full year numbers would be, and if we need to make any adjustments to that, we can do that to give us really our forecast for 2015. Really, we're looking at this as an opening balance for our 2016 budget year. Now for the budget year, we do want it down to the monthly grain, or pardon me, for income statement projections, we want them down to the monthly grain. So we might be projecting out these different accounts, both P&L, revenue and expense accounts, at a monthly level, which is fine. So that detail of the plan will end up here. And this is fed in from other templates. So this gives us P&L activity in each of these different periods. And then if we need to, we can make an annual adjustment to give us what our plan would be for the full year. And then by looking at, in the case of balance sheet accounts, by taking our forecasted opening balance plus the year activity, that's how we'll end up getting our forecasted balance sheet for 2016. And similarly, we can do the same for cash flow. So let's take a look at that for a moment. Here, if you look at a cash flow template, following the same pattern, we're going to pick out the areas of the cash flow statement. The rows we're seeing along the left-hand side here represent the areas of the cash flow statement that we want to report upon. And we also will start with, first we're going to figure out what are audited actuals. So if we look back at, maybe we want to show our 2014 actuals here, and again we can make adjustments to each of the lines that we may need. And then that is going to flow into our current year forecast. So the current year forecast is going to show us what we have right now, along with what we project and any adjustments we need to make for the ending cash expected for this year. And then that's also going to influence the cash flow for the budget. So all of the formulas for this can be, if you can write it in Excel, it's an Excel formula, then we can do it right here within the template to figure out what the budgeted cash flow should be for the budget year. So we start with opening balance, or the current cash flow. We can make adjustments if we need to do so, and then we'll end up with the ending cash flow for the year. So same pattern where we start with 2 years ago actuals, we look at current year forecast, and then look at the coming year budget. From a template perspective, we can put whatever accounts we need to in these different sections to make sure that we're including the accounts we want for each of the cash activities that we're trying to track. And it all saves to the time.annual member. So we do have a budgeted balance sheet, income statement, and cash flow, but a set of financial statements based off of just our P&L projections. Rather than having to do a full budgeted balance sheet, then we can really get a more accurate representation of what we think our balance sheet and cash flow will be as part of the budget, without having to do any complicated capital planning or balance sheet specific stuff. So hopefully this was helpful. Send us any comments you have about any other topics you'd like to hear about. Thank you.